Dobar dan svima, pre svega da pozdravim.
Ladies and gentlemen, welcome to the presentation of the inflation report. First of all, I would like to greet President of the Council of the Governor and members of the Council of the Governor, as well as our colleagues from the Statistical Office and other people who are present here. I would like to thank you for the quality reports we can present today. I would also like to greet all members of the press and open a regular conference devoted to the February inflation report. I think that you have become used to coming to this conference. I have the pleasure of introducing and presenting my vice governors, Vice Governor Dijana Dragutinović, Vice Governor Ana Gligorijević, Vice Governor Veselin Pješčić, and Director of the Administration for Supervision of Financial Institutions, Mr. Đorđe Jeftić. To my far right is Mr. Hinić, General Manager of the Directorate for Economic Research and Statistics. I will give you some brief overview first, and then Mr. Hinić, General Manager of the Directorate for Economic Research, will deliver a speech presenting the inflation report, and after that we will open the floor for your questions, and we will give you all the clarifications that you need. You may also ask questions to Vice Governors and to the Director of the Administration. First of all, I would like to say that the measures taken by the government and the National Bank of Serbia in the prior period were aimed primarily at achieving macroeconomic stability. Even though the first results of these measures are already visible, their full-blown effect is expected to unfold during the course of this year. This full effect is called bringing inflation within the target tolerance band for plus minus 1.5%, and the emphasis is not on 4%, but on 4 plus minus 1.5%, and I kindly ask you to interpret it like that, because there are some journalists who are highlighting, who keep insisting on the 4% target, whereas we are talking about a target tolerance band. Last year's inflation was high and measured 12.2%, which is above the upper bound of the target tolerance band. This is why we, as the Executive Board, and I, as the Governor, wrote an open letter to Prime Minister Dačić and explained the key factors behind such inflation outturn. We said that these were the cost-push pressure on food prices and the weakening of the dinar in the first half of the year, as well as the October increase in excise duties and value-added tax. So these were the main reasons that drove inflation growth. Let me remind you all that the weakening of the dinar in the first half of 2012 was due to the high public consumption in the same period. Together with unfavorable movements in the international environment, this induced a rise in Serbia's risk premium. In addition, prolonged drought led to a robust growth in primary commodity prices, not only in Serbia, but worldwide. This has sent direct pressure on food prices, whose growth spilled over to other prices through the inflation expectations channel. The response of monetary authorities in the prior period was aimed above all at easing the spillover of that growth to other prices, the spillover of inflation expectations. From mid-2012, the National Bank of Serbia has been tightening its monetary policy stance by raising the key policy rate on several occasions to the current level of 11.75%, also by increasing the dinar share of foreign exchange reserve requirements, and by changing the direction of repo operations effective as of the 19th of December in order to mop up excess liquidity. So now we implement reverse repo operations. At the same time, the government has taken fiscal consolidation measures, setting the groundwork for medium-term public debt sustainability, which is critical for the assessment of a country's risk and investment attractiveness. And improving the country's investment attractiveness is our key goal. So we want to make Serbia a predictable business environment. We want to attract investors with controlled inflation and with price stability. The above measures, plus stabilization of the European financial markets, contributed to the drop in the country risk premium and helped reverse the trend of the dinar exchange rate in September. According to our expectations, together with the anticipated fall in primary agricultural commodity prices in the new season, low aggregate demand and we're not looking forward to this low aggregate demand, and fiscal consolidation, this will help bring inflation back within the target tolerance band by the end of 2013. However, inflation will be rising for some months yet on the back of administered price increases, and we're talking primarily about the increases in electricity prices and gas prices, but inflation is expected to head down from the second quarter onwards. Ladies and gentlemen, in its January report, the World Bank highlighted macroeconomic stabilization, that is, delivering low inflation and public finance consolidation, as the key factor that contributed to strong economic growth of developing countries in the last 15 years. In our view, this is the path Serbia should take, and we, as the National Bank of Serbia, and when it comes to monetary policy, and the government of the Republic of Serbia when it comes to public finance consolidation. Only in this way can we can reduce country risk, create a good business environment, and a solid basis for long-term sustainable growth. The presence of the International Monetary Fund, and I'm deliberately saying the presence of International Monetary Fund, because this means not because a precautionary arrangement is desirable. We do not need any funds for maintaining stability. Our foreign exchange reserves cover 7 months of imports, but we need an advisor. We need the fund as an advisor, and I may freely say we need it as a good-intentioned checker of all data of the National Bank of Serbia's data. Anyway, all of the National Bank of Serbia's data are available to the public, and we are more than interested in the presence of the International Monetary Fund, because their presence means a favorable business and investment environment. The continuation of talks with the International Monetary Fund is expected in May. Our cooperation with them is ongoing with regard to all the activities we are implementing. Besides, to deliver low and stable inflation in the medium run, the National Bank of Serbia and the government will focus their efforts in the coming period on the stabilization of the food market and on defining the dynamics of administered price growth. This is the key task that we will be working on. And finally, at the end of this introductory part, I would like to highlight that the latest data on declining monthly inflation rates and a modest recovery in economic activity, along with export growth, give us reason to be moderately optimistic with regard to the outlook for this year. That is, we do not see any major risks to the realization of our expectations, and this is the most important thing for our team, who are engaged in projection development. This will also ensure a more predictable conditions for investment and for business decision making. Now I give the floor to Mr. Branko Hinic.
Ladies and gentlemen, esteemed members of the press and fellow economists, late 2012 was characterized by the weakening of inflationary pressures and moderate economic growth, including narrowing of the foreign trade deficit. We expect such movements to continue in the current year. According to our projections, after measuring 12.2% in December, inflation will return within the target tolerance band by the end of 2013, while the economic activity, after declining by around 2% in 2012, will grow by around 2.5% in 2013. In contrast to Serbia, and according to estimates, the euro area economy will remain in recession. Following a 0.4% drop in 2012, GDP in the euro area is expected to contract by 0.1% to 0.2% this year. Despite unfavorable tendencies in the real sector, financial markets are recovering, and yields on sovereign bonds of the euro area periphery are declining. This is due to ECB's sovereign debt purchase program, steps towards tighter fiscal integration, and the agreement on the single supervisory mechanism for euro area banks. Global financial markets stabilized further after the fiscal cliff was avoided in the USA. These measures, together with further monetary policy easing in the leading world economies, contributed strongly to falling yields on Serbia's Eurobonds. That is, to a decline in the country's risk premium over the past 5 months. Risk premia across the region began to decline in July, after the ECB's governor pledged to do whatever it takes to save the euro. The fall in Serbia's risk premium began a few months later, after the announcement of fiscal consolidation measures. Increased monetary policy restrictiveness, fiscal consolidation measures, and falling risk premium were the key factors behind the dinar's appreciation since September. This meant the reversal of the depreciation trend from the first 8 months of 2012. Such developments in the foreign exchange market were also driven by elevated foreign currency sales following the extension of subsidized loans. In the last quarter of 2012, the economy grew 0.3% relative to the previous quarter, but was 1.5% down on the same period of 2011. At the year level, GDP declined by around 2%, chiefly as a result of the drought-induced agricultural downturn at home and recession in the euro area. The last quarter saw a 2.1% recovery of industrial production, mainly due to increased production in automobile and oil industries. As the automobile industry is almost fully export-oriented, Serbia's GDP growth on the expenditure side in the fourth quarter was largely generated by net exports. Government consumption provided a positive contribution to growth. On the other hand, domestic private demand, both consumption and investment, declined. In the current year, agricultural recovery and expansion of automobile and oil industries will be the key generators of economic growth of around 2.5%. Consistent with this, net exports will give the main impetus to GDP growth, despite the modest outlook for recovery of our key foreign trade partners. Furthermore, a positive contribution is likely to come from private investment, which was exceptionally low in 2012. On the other hand, fiscal consolidation measures are expected to diminish government consumption, including private consumption, owing to declining real household income. Growth in year-on-year inflation slowed down during the fourth quarter, arriving at 12.2% in December. Inflationary pressures were most pronounced in October, driven not only by higher costs of food production inputs and the effects of past weakening of the dinar, but also by the increase in VAT and excises and growth in administered prices, which resumed after an almost one-year standstill. However, after a 2.8% monthly rise in October, consumer prices stagnated in November, only to decline by 0.4% in December. Such movements in the last 2 months of 2012 resulted from lower prices of certain food products, mainly on account of dampened demand caused by considerable price hikes in the prior period. We expect year-on-year inflation to return within the target tolerance band of 4 plus minus 1.5% by the end of the current year. It will, however, keep rising for another several months on account of the expected increase in administered prices and a low base effect. In the year to date, an increase has been recorded for prices of cigarettes due to excise tax harmonization, medicaments and natural gas. High electricity prices are also quite likely in the coming months. As of the second quarter, however, with the onset of the new agricultural season and a decrease in prices of agricultural commodities, year-on-year inflation is likely to decline. Fruit and vegetable prices will be the first to directly impact a decline in inflation, most notably in May and June, while cheaper primary agricultural commodities such as wheat and corn will exert a more gradual effect through lower costs of processed food production. Global markets have already seen a fall in prices of primary agricultural commodities. The past strengthening of the dinar, feeding through to lower import prices, should make a significant downward pressure on inflation in 2013. Low aggregate demand is also likely to work in the same disinflationary direction, given the still high unemployment and low real income of households. Declining inflation expectations and consistent implementation of fiscal consolidation measures will also ease the upward pressure on prices. Responding to rising inflationary pressures, the National Bank of Serbia tightened its monetary policy stance over the last 8 months. In this period, the key policy rate was raised from 9.5% to 11.75%. Dinar allocations under foreign exchange reserve requirements were increased, while the direction of main operations was reversed in December to mop up excess dinar liquidity. Full-blown effects on inflation will be seen in the course of this year. With the waning of the inflationary shock caused by food and administered prices, the National Bank of Serbia's Executive Board will consider the possibility of easing its monetary policy stance in the coming months. However, as unexpected changes in the impact of some factors on the above inflation projection remain possible, the expectations with regard to the character of monetary policy in the coming period are in no way binding on the National Bank of Serbia. Ladies and gentlemen, the National Bank of Serbia's actions towards maintaining medium-term price and financial stability and the implementation of the government's public finance consolidation measures are the best way to help the economy in the long run. At the same time, this will push down the country risk and borrowing costs while enabling a more stable business and investment environment. Trends in place over the last several months have started to confirm this. Thank you. Do you have any questions?
samo molila zbog naših čitalaca, odnosno gledalaca, da pojasnite ovo. Znači, imaćemo...
Could you please explain something? So we will have statistically better data, we will have macroeconomic stability, but citizens will live in a worse way, although many citizens believe that it cannot be worse as it is already. The second question regards the lawsuit of the Citizens Association Efektiva. Could you tell us today how will the NBS and whether it will take part in this lawsuit? If not, how will you help them? So your question relates to statistical data, the low base in prices, you mean? Well, citizens live in a very bad way, and I don't know how the situation can be improved. This does not depend on methodology, but it is undisputable that we need macroeconomic stability, and we can ask the question whether macroeconomic stability provides better conditions for economic growth, because economic growth is the key assumption for ensuring a higher living standard of our citizens. So in the short run, given the current price hikes, we can expect a decline in the real standards, in the real standard of living, but all that is aimed at creating the conditions for new investments and for higher economic growth and for the sustainable standard of living, of course, with lower exports, that is imports compared to exports. And I will answer the second question, but I would also like to add something. So you asked whether the new methodology will mean better stability, but citizens will not feel that. Macroeconomic stability does not mean worsening for anyone, and it will not mean that. It does not mean any kind of deterioration, because macroeconomic stability means the betterment of investment conditions, and investors mean investments and job creation, which is directly linked to higher employment and a better standard of living. So, on the contrary, there is a positive correlation between these two processes. You said that private consumption, in addition to public consumption, will also decline. No, it will not decline because we will have low aggregate demand. We are not looking forward to it, but there are a small number of citizens who can buy products, so it will not worsen. We do not expect a decline in employment because employment is rising. This is visible, although the figures are not significant, but we do have an upward trend in terms of job creation, so we do not expect any deterioration in aggregate demand. We will not have higher unemployment and those unable to purchase goods. On the contrary, we want to say that we will not have sudden changes in the number of employed persons, which enables a better control for what we are in charge of. And what you asked relating to the lawsuit of Efektiva, the Citizens Association, they're asking the NBS to join them. So we issued a press release, so I believe you can access the press release, but I can repeat. The National Bank of Serbia is an independent institution, and it does not wish to meddle into the workings of the court because the judiciary is independent, but we also do not expect from the court to intervene in the activities of the regulator, and the NBS will not defend the banks, and it cannot join this lawsuit of citizens either, as the central bank will do its own work, meaning the following. If the competent court is experienced, and if it asks for an expert opinion of people from the NBS or the expert opinion of the NBS as the institution, we will be glad to answer this plea. We will help in the adoption of the best possible solutions, but of course final court decisions will help us, will serve us as a signpost for us in terms of some further recommendations relating to these issues and problems. Inviting the NBS to take part in these court proceedings is really unusual, to say the least, because we cannot appear in any possible way as an intervener. Although we are interested, of course, in solving this issue, and our interest relates to the fact it relates to new bank products and the transparency of these bank products. And it also relates to our activities as a regulator in terms of consumer protection, of financial services consumer protection. So solutions cannot be fast and easy, but in any case, these solutions will be compliant with the independence of all institutions. We will respect citizens, of course, but we need to establish good practice of cooperation among all participants in the market, regulated, that is the central bank, courts, citizens, and the overall banking system of our country, because we are all interdependent.
Wanted to follow up on the discussion of on this problem. Does this lawsuit affect the process that we reported on? We reported some speculations that there will be some kind of an agreement between the National Bank and with other banks when it comes to resolving the issue of non-performing loans. Can these two issues exclude each other? No, that can happen in no way. But a conference devoted to the presentation of inflation report will not be turned into a conference discussing this matter, because we are doing our job in the best possible way. This bank is led by a team of excellent pupils who are not used to copying from other people. You see the management of this bank before you. So we are leading and not following. We are doing our job, not waiting for anybody to encourage us to do our job, but we keep opening the problems and the issues that are in the interest of the citizens of the Republic of Serbia. We will help the judiciary, and we will keep abreast of everything that's happening in this field. Can we return to the inflation report now? Does your plan of curbing inflation, will your plan be affected by electricity price increases? Have you recommended to the government to do it during the heating season, or not? Mr. Pješić will answer this question. The inflation projection has incorporated the increases in administered prices. At year level, we assume that administered price growth will amount to 10.7%. Most of this growth, as you can see from the chart on where inflation will peak between Q1 and Q2, administered price growth. Most of the administered price growth will take place in the period January-April. What is uncertain is that we do not know in which month there will be electricity prices. We assume this will be March or April, and in this context we assume inflation will reach its peak at that time. What's also important is that the relative high share of administered price increases in the CPI, it stands at 22%. And depending on administered price growth, the contribution to headline inflation at year level will be 2.4%. And of the overall assumed increase, we have allocated to the first 4 months 1.6 percentage points of growth. What's also very important for us and for the state and all other market players is the predictability of administered price revisions, and in this context the National Bank of Serbia has initiated talks with the government in order to define a dynamics of administered price revisions. This would make our job much easier. It would facilitate inflation projection development, and it would also provide a predictable environment to market players who would be able to engage in better business planning. This means that any delay in administered price increases will not jeopardize our inflation projection. It will only move forward these inflation peaks for a month or two. Mr. Piesic learned from me how to be extensive. But there are no risks to our inflation forecast, so the inflation peak can only be moved forward by 1 month. TV B92. How do you explain? How does the constant price growth affect keeping inflation within the targeted framework? Will you manage to keep it within the targeted framework? Year-on-year inflation is rising, and in this is why we cannot say that there is a constant price growth. In December we had deflation, so there was a minus 0.4% inflation growth, whereas in November we had 0 price growth. In the coming period we will have a moderate rise in inflation, which will be attributable primarily to administered price growth. So the contribution of administered prices to inflation growth in the first quarter will be 1.6 percentage points. This will be a direct push to inflation, and after that we will have a secondary effect when the growth in these prices will be spilled over to some other prices that incorporate electricity prices. But what's important is that after that peak, after the inflation reaches its peak, which depends on the timing of the electricity price increase, inflation is bound to start falling, because monthly inflation rates from the same period last year will be decreasing, and this will be a result of past restrictive monetary policies. I was referring to food prices more. You said in your inflation report that the citizens do not feel the decrease in food prices that you mentioned in your inflation report. We have some data about the price increases in retail stores in January and February, and these are staples. Maybe some individual prices have increased, but we are monitoring the consumer price index, where each product has its weight. So this does not mean that each group of products within a specific category of prices will increase. In December, we had a decrease in prices of meat and fruits and vegetables. What's quite likely is that we will have an increase in food prices. From April to December, food prices went up by 9.5 percentage points, from 12.2 to 12.2%. Most of the inflation growth was attributable to food prices. But inflationary pressures from food prices are gradually waning. They are still present, but they're not dominant. What is dominant now is the growth in administered prices. May I explain this to you? The temperature is 11% measured by the devices which are correct. But the subjective feel of the temperature is different. And the subjective feel of the citizens about the price growth, and you are mentioning constant growth, Mr. Piesic just told you that there was no such growth if you measure it with the internationally accepted methods. So in November we had stagnation, and in December we had deflation, and this is why inflation did not reach 13% but 12.2%. So we stick to the methods of precise measurement of prices included in the consumer basket, and this is why we speak with such certainty that we will be able to manage to control inflation. The citizens are saying that everything is going up, but we are faced with a decrease in prices of meat, corn, and we talked about this in our last presentation of the inflation report, and you can see this on the net.
2-3 weeks ago, you announced a solution for citizens who took Swiss franc indexed loans. What have you done? We are working on that right now, and there are many different problems, diverse problems are in place, and we have also different banks and different loan takers, so we are really thorough. We wish to find the best possible solution in order to preserve the best working and business conditions in the market. So we are not slow, but we want to reach the best possible solution. Thank you. Any further questions? Gordana Filipovic from Bloomberg. What about the key policy rate of 11.75%? Is that the level of the restrictiveness which fully ensures the return of inflation within the target tolerance band, or you believe there is more room for further restrictiveness of monetary policy, especially given the announced price hikes? Well, according to our expectations, the current degree of restrictiveness is sufficient for inflation to return within the target tolerance band by the end of this year, assuming that all other conditions remain the same. Any further questions? If not, I would like to add something. Because you know that the oil industry of Serbia presented its report, and I would like to end this presentation with an optimistic note. So the effects of NIS will be tangible on economic growth of Serbia and the balance of payments. So according to our estimates, the contribution of the NIS production to Serbia's economic growth will range from 0.5 percentage points in 2013 and NIS will process around 3 million tons of crude oil, and we expect a reduction in our foreign trade deficit by 100 million euros. This is very significant for Serbia. On the other hand, the contribution of Fiat and exports of automobiles of Fiat, according to our highly conservative estimates, where we take into account the exports of 100,000 cars, although Fiat says that this figure could be higher, around 150, 180 million cars, but we assumed a more conservative estimate. So this should contribute to the economic growth of around 1 percentage point in the current year. It will bring to Serbia around 300 million euros, or 1% of Serbia's GDP growth, which is, I would like to emphasize, will impact on a reduction in foreign trade deficit. So I would like to end this presentation in an optimistic way, and we do have these positive expectations. So thank you very much. What about the energy products? So you have to ask the ministry responsible for that. We have to see when the buyer for the US steel will appear. If we keep inflation under control and if we have a stable exchange rate, this will help our citizens, and this will also imply a faster arrival of foreign investors, including to our steel plant. So we wish to do our part of the work, and we are really devoted to all our activities, and I believe that all of those who wish to see our results are able to see our results. Thank you very much once again.